Hello, greetings once again from my home office here. I'm here with you today to share a little bit of an update and some opportunities that we think you can look forward to and what's going on. So I'm going to start off by saying I do believe I'm an essential service, so I intend to continue working all through this. I am working from home. And I do want to let you know that to be cautious, our office has decided to close at this point to really help with the social distancing. So while our main office is closed, you can communicate with me through email, text, cell phone. Erin is working, and we are doing our best to keep things as normal as possible when it comes to business through this. So from the investment side, things are pretty much steady business as normal. On our mortgage side, we are continuing to operate business as normal as well with some adjustments, but we are able to get mortgages through and done for anybody who is looking at an opportunity to refinance with the lower rates that we currently have. Our mortgage specialist is available and we're happy to talk about those. On our insurance product sides, there have been a few more complications with regards to some of the paramedical companies not coming in to do parameds. So there's some holds on that. But most of the business, again, is business as normal. So we will continue to be in communication with everybody to let you know where things are at from our perspective. So with that said, time to talk a little bit more about what's going on. I will start this off by saying my crystal ball is broken. I cannot tell you what is going to happen in the future. So what I really can tell you is what has happened in the past. Starting with a little bit of good news, we are on a 3-day rally up. Yay! Again, I can't tell you if that means we've reached the bottom. I can't tell you that that's going to mean it continues going up. I do not have a crystal ball, but I always think it's nice to share a little bit of good news. Really, what that rally has been based around is the belief that this $2 trillion bill from the US is coming with regards to relief measures for the US, as well as $4 trillion in measures by the Fed for liquidity on the US side. The Canadian side as well previously announced our bill. And again, these are just starting measures for how to help people get through this. I did send out an email. If you have any questions on that, please feel free to contact me. I'm happy to go through what's available and what may or may not apply to you and how that works. So that's sort of what we believe has caused this little bit of a rally. And that's where we're at today. But if we look a little bit further back, we are definitely still in a down and there's no way around that. So talking a little bit about what that's looked like. Historically, there's been 137 days from the high of a market to entering into a bear, which is a 20% drop. This time it happened in 16 days. These are Dow numbers we're talking about here. So if it feels fast to you, if it feels extreme, it's because it is. It has happened much quicker than the normal. The average time in a bear, again, according to the Dow, is 146 days. But we've just proven this is an average. And in all fairness, I'm not sure the average case actually exists, but it gives you some idea to look off of in numbers. Here's what I'm going to tell you. Trying to time that bear market, trying to time the market in general when it comes to averages doesn't work. When we look at if you missed the top 50 trading days, so if you had the worst luck ever and you just timed everything wrong, starting in 1990 all the way up to 2019, in the Canadian market now, in the TSX, if you missed only the worst 50 days trying to avoid the bad days, then you would have taken your average return from an up 5% to a down 1.8%. Timing doesn't work. You know, the best example of that is last January. Many people believed you needed to pull out of the market. It was as high as we could go. We were ready to enter a bear last year. And if you did that, you missed one of the best years. So timing the market isn't the best thing to do. So what can you do? One, nothing. Trust the professionals. Our fund advisors are doing a great job. On our call Monday night, we got to speak to one of the representatives from Wellington, and they shared with us a little bit of their strategies and what they've been talking about and looking at. At this point, they're seeing this more as a horizon issue than a actual issue, meaning when will it come back as opposed to will it come back? And they're thinking that because of all the stimulus that's happened, the job list action that's been taken by governments, the coordination of the responses to this. So they believe that things will bounce back. The question is when. So what they're doing is really prioritizing protecting the short term and thriving long term. And they've been doing that by using lots of different techniques, one of which is they've been converting some of the options that they had purchased. Options protect on a downside. So you give up a little bit on an upside to make sure that if you have a major drop like we have, you have some protection on that. So they've been converting those options to cash, making sure that they have enough liquidity in these funds to get through this. And well, when they look at the businesses that they're purchasing, making sure that they also have enough liquidity and balance sheets to get through this. And they have been really active on that. They've also been really active on the fixed income side as our portfolio managers talk. They do believe fixed income is going to require more active management because of the lowering of interest rates and the decline of long-term yields and how that's going to play out long-term. So the reality is you don't need to do anything because we are doing it. Trust the portfolio managers you have and trust the professionals. The reality is they have more information than we do. They have more education. So don't try and outsmart them. You know, they are very good at their job. So then what can you actually do that's doing something? One thing that, you know, is a thing to look at right now is from a spending perspective. Most people have reduced their spending naturally because if you can't go out, you reduce your spending. So look at that and see if you can actually make some adjustments. If you are retired and taking RIF payments, perhaps we can look at lowering those. You're not spending as much as you normally would. The government just announced for those who qualify for the GST credit, there could be a doubling of that. Are we able to reduce what you're drawing out of your investments and leave them invested in and in the market so that they can rebound if you don't need that money? Keeping in mind that we can make these changes on a daily basis. We can reduce payments for one payment, increase them again. We do need about 5 days notice, but we can adjust them at any time and there's no penalties for that. For the people who aren't drawing down, but instead are contributing, look at what your budget is. You know, there's going to be lots of opportunity with, again, reduced spending within the household if you still have income coming in to possibly contribute a little more. People with kids, if you qualify for the child tax benefit, they're looking at giving an extra $300 per child to your May payment. If you don't need that extra cash flow, that's something that could be used to invest. For people who have kids in daycare, 2 kids in daycare full-time costs somewhere between $1,500 and $2,000 a month. Trust me, I know. So looking at, okay, if I don't have that bill, maybe I can take some of that money and use it as an opportunity to beef up my investments, buy more while we're able to do it and we've got that additional cash flow. Again, these can be done as monthly measures. They can be done as lump sums. And we have lots of different flexible ways to look at contributing that. There are measures out there for business owners as well. If you are keeping employees employed during this time, the government has announced that there will be some subsidies for payroll and those types of things. So again, this may be a way to build up some cash in your businesses as well that then can be used to invest longer term. So there's lots of different things to consider out there, things that we can do on the getting more in there. If you aren't able to reduce what you're withdrawing or contribute more, there are still things we can do. We are looking to rebalance. We've been actively reaching out to people. We're doing it behind the scenes. We're calling you to make sure that you know what's going on in your portfolios. Buying low doesn't always mean taking cash out of your pocket to buy low. It can also mean just rebalancing, taking some of the funds off what is done well and putting it in to things that are a little bit lagging in terms of returns. We talk about having that portfolio balance where we're able to take out of the equity when it's high, put it back into the fixed income, take from your fixed income when the equity market is low and put it back into equity. These are the types of things that we are working on right now and can really benefit during these times. So again, I just wanted to say a quick hello, keep you in the loop for what's going on. I will be back again with more information as this continues to go on. If you have any questions, any concerns, want a review of anything, please again feel free to reach out, email, cell phone, text, whatever works best for you. I am here for you. Thanks a lot and we'll talk soon. Bye.